Welcome to the Money Show, where money talks and we make sure it speaks your language. I'm Kavita Thapliyal, and this is your show, your money and your power play. We cut the jargon, break the noise and give it to you straight. Now, what to do, when to do and how to grow your money like a pro. From smart savings to sharp investments, from busting money myths to goal planning, we've got your back and your bank and your financial future as well, because here you're not just a viewer, you are the boss of your financial life. So buckle up, and it's not just the money show, it's the money show, and this is where financial freedom begins. Today on the show, we'll be focusing on various aspects of investment as well as insurance, and specifically life insurance. But before I begin, let me flash our WhatsApp number on the screen, and you can note down our WhatsApp number so that you can send across your questions to us directly, which is 865-797-4571. We also have an email ID, which is themoneyshow@etnow.tv. So if in case you have any queries which is related to your investments or your insurance or anything about your financial life, you can send across your questions and we'll get it answered live through our experts. All right, so let's begin on a very interesting topic today in focus. How should you decide the payout of your life insurance claim? Now, buying a term plan is one of the most responsible financial decisions you can make, but what happens after the claim is made? That's a question many families are not prepared for. Now, in the unfortunate event of a policyholder's passing, the family receives a large payout, but how that money is used can make or break their long-term financial security. Lump sum or staggered payments, spend, save or invest. Too often families are left confused, overwhelmed and vulnerable. And how should you plan your term insurance payout in advance? What options do you explore while buying the policy itself? And most importantly, how can you guide your loved ones today to ensure they make wise financial decisions tomorrow? So in today's episode, we break it down from payout options to investment strategies to emotional readiness as well, because it's not just about getting insured, it's about making sure your family knows what to do when it matters the most. And let's begin. I have with me Srinivas, Balasubramanian, Chief of Product and Marketing at ICICI Pru Life Insurance. I also have Deepak, Yohannan, ex-CEO and founder myinsuranceClub.com, and welcome, good evening to both of you. And Deepak, let me just put the first question to you, because I really want to know the basic mistakes which families do usually when they receive a large term plan payout. So what kind of mistakes are we commonly talking about?
So the most common mistake I would say is getting the money at a very emotionally unstable moment of time, and you are actually seeking out help for a lot of things, and you are emotionally quite down because someone in your family has passed away, and you have to make a very important decision among a lot of other non-financial decisions, and you get a very large amount of payout. Let's take the example of a 1 crore payout. Now, it is very difficult to think rationally what to do with this amount of money. My recommendation is, one is, among the different modes of payment which are there, the preferred and the most used one is getting a lump sum amount. So take the entire 1 crore insurance payout. Use as conservative and safe methods of investment rather than trying to increase your payouts and returns with the money which you have. Seek the advice of extremely trusted people. It doesn't have to be the elder in your house who may not be the most financially savvy and might try to suggest a nice intention, but the results might be wrong. So I would say lump sum, take the lump sum amount plus invest in extremely secure payments. Recommended would be FDs. Break it up into 1 lakh kind of FDs and across a few banks and put it so that. And before that, the priority would be to finish off all EMIs which are there, any loans which are outstanding. I would say knock them off on priority.
Deepak, now one more thing, how should nominee be financially financially educated or guided in advance about how to use the money if the payout happens?
Ideally, it is having access to a very trusted financial advisor. Do not run into the bank and think that your bank RM is the most trusted person. Yes, you might have interacted with that person, but having an independent person who is fee based and not really, reliant on how you invest that money through that person, the chances of you getting better advice is high.
All right. Okay, so I also have Srinivas Balasubramanian from ICICI Pru Life Insurance. Srinivas, hi, good evening, welcome to the show. Okay, so we were just talking about how to decide the payout when it comes to a time where the family is receiving a life insurance payout, and they need to invest it properly and maybe plan it well even when you're deciding on the term insurance cover. So just to know from you, what are the best ways to park or invest the insurance payout to ensure it lasts long and supports the family? I'm sure, because you being in the business, when someone is buying this kind of a product from you, hand holding your policy holder becomes a part and parcel of the service that you provide to them. So how do you actually guide them, and what factors should they be considering, while planning the cover amount and even the later process?
Sure, Kavita. Thank you so much. I think it's a great question. Uh, One of the ways of when we talk to our customers or when we even train our sellers when they're talking to customers is to think of it as an acronym, right? It's just easy for people to remember. And the acronym is a simple one. It's India, INDIA. And each of these has a relevant step which the person needs to keep in mind while buying the policy and also while informing the family about it. So let's start it off. I is insure adequately. Needless to say, while taking the decision to buy a term insurance is itself a wise one, it's also important to look at the quantum of coverage and the kind of coverage. Quantum of coverage, of course, refers to how much of life cover one needs to have. The 1 crore example which Deepak spoke of, but obviously it needs to be kept in mind based on one's income, age, outstanding debt obligations, and so on and so forth. Type of cover will mean, in addition to the basic life cover, do you have adequate critical illness coverage, accidental death or accidental disability coverage, or hospital cash benefits? So these are the kind of additional coverages that one needs to assess based on his or her lifestyle and risk factors. So that's the I part of it, insure adequately. The end part of it refers to the nomination part. A lot of people, obviously, as a part of the insurance purchase process, one needs to nominate. One needs to also ensure that the nominee is aware about the fact that he or she is the nominee of the policy. Also, one needs to periodically go back and check of the policies that they have purchased if all the nominee details are updated or if they want to make any changes to the nomination that they have captured in the insurance policy. The D part of India acronym refers to digitizing the documents. While today almost all insurance companies send all the policy information on emails, WhatsApps, and SMS, it's also important that the policyholder also digitizes those documents and ensures that the family is also aware of it. The I is actually the inform the family. A lot of people buy policies, but they somehow, due to a combination of factors, do not inform the family. Some part of it is sentimental. Look, if I inform my spouse that I have taken a policy, they might ask why, and so on and so forth. But the completion of the process of buying insurance is when you also inform the family members of the policy that you have purchased, the policy number, and so on and so forth. Last, the A part of India is assessing periodically, be it the amount of coverage one has taken, or the kind of coverage one has taken, or the nomination details. All of these are subject to one's own lifestyle changes, one's own income changes, and so on and so forth. So this is something which we often tell our customers, saying, great job of you have decided to buy term insurance, but the process becomes logically complete only when you follow this whole 5-step process.
One more question to you, Srinivas. What are some real life examples, if you could give, where good or poor payout planning significantly impacted the family's future?
That's a great point. And honestly, as an insurance company which deals with large numbers of customers and also large numbers of claims payout, we are often we come face to face with scenarios where someone has taken the policy and the family is not aware about it. So at times it's only an accidental discovery by the family, or when we as an insurance company find out that look, such and such policy has not been claimed, and we reach out to the customer. Also, in instances where the family is aware, they are not really sure. I think Deepak made this point about the emotionally vulnerable moment, and that's so true because very often the spouse, in most cases, the spouse would be the lady. And while women are getting increasingly financial savvy, it's still an emerging trend, right? So you often find that here is a person who has so far not been very financially hands-on with the key decisions that the family has made, and here suddenly there is, let's say, a 50 lakh payout or a 1 crore payout, and then they make, so I would say, suboptimal decisions, right? Either, for example, one way, logical way in which one could look at using this payout is close outstanding loans, right? So that at least you are having a debt-free life and you can look at maybe interest generation from what is the remaining amount. But they choose not to do it, and the life insurance amount is typically lying in a low interest earning kind of an instrument, which then makes things quite bad from a financial future situation of the house point of view. So there are a lot of such instances that we as an insurance company, of course, come face to face with, and therefore a large part of our education to customers at the time of onboarding is ensure that your family is aware, ensure also that the nominee is aware that when they come to file a claim, the nominee can choose whether they want the insurance amount in the form of a lump sum or in the form of regular income. This is a very important conversation that the policyholder needs to have with his or her spouse or the nominee, saying that, look, if a situation were to arise where you have to file a claim, please decide at that point of time whether you want to get the insurance amount as a lump sum or a regular income. So these are some of the things, Kavita, which we keep focusing on. And of course, it's going to be a permanent WIP zone because first of all, you have to educate customers about buying insurance. These are some of the other nuances that you want them to be fully aware of.
Sure, sure. Very well explained and, quite an elaborate way and touching upon the crucial fundamentals, which one should be considering before buying the right kind of life insurance product. Deepak, coming to you, see, we are also looking at AI planning and a lot of robo planning is happening. People are, digital savvy, going online and, deciding financial plans for themselves. Now, are there any tools or calculations or calculators available today, that help people decide the ideal payout structure for their needs, if possible? How can one do it online?
While I think there are enough tools if you go online and you just Google for, financial planning, or let's say 10-year financial planning, or how to invest 1 crore, how to invest 50 lakhs, all of that you will get online. But I don't think we should rely purely on those for insurance payouts, specifically death payouts, where you cannot afford to go wrong. There are other dependents in your family. Every piece, because what you get from these tools are fairly generalized outputs. They may not be very customized to your requirements, and that is very, very important that you do. You will probably need to have a 15 to 20-year horizon, and that requires a bit more detailed, and every element needs to be covered. So I would not recommend going. You can start off with those tools, but definitely take the assistance of someone who's done it before, who knows what is important and is independent. And as I was saying, do not rush to your bank RM who's typically assisting you with investments. Go to someone who's independent, and there are quite a few who are actually quite good at their jobs.
Sure, sure. Srinivas, you have answered this question in parts, but I want to ask you: are staggered payouts better than lump sum for families that are not financially savvy? Why or why not?
Okay, Kavita, it's a bit of a tough one, and I will actually build on what Deepak mentioned on the previous one about the AI-based tools and calculators. Honestly, it's going to be a very person and a family situation specific choice that they need to make, and it could be as the number of dimensions which would affect this decision could be from look, what's your debt situation, right? To uh, what is your ability to invest smartly, right? That could be a second one. And third could be, are you looking at insurance as an income replacement tool or some other use case that you have thought of for insurance? So, for example, if a person takes, and I'll illustrate this with some examples, right? If a person were to take insurance when I'm using he as a pronoun for sake of simplicity, when he has also taken on a home loan, right? And there's, let's say, a largish home loan on the back of which the insurance policy has been purchased. Unfortunately, 2 years into this, the person passes away. So now the family is going to get, of course, the insurance payout, but they're also saddled with a large part of the outstanding home loan. It might very well be prudent for the family, the spouse in this case, to take a large part of the life insurance amount and close the loan so that the home that you're living in is a debt free asset that you have along with you, right? On the other hand, let's say the same person who had bought this policy has managed to close the loan and the life insurance cover still continues. And then, unfortunately, he passes away. Here, the primary use case of the insurance policy is not really from a closure of the loan or the loan protection. It is more of an income replacement, income substitution tool. There, it makes a lot of sense for the spouse to choose the periodic payout option and say, look, for me, what is important right now is getting that regular monthly income equivalent, which I was getting when my spouse was around. And that would be a more relevant use case of insurance. Third aspect is the financial savviness, right? I have mentioned this earlier. Uh, if the person is savvy enough to invest or has access to independent advisors or planners that Deepak was referring to, uh, make sure that you take the lump sum payout option and invest it prudently, right? But if either due to lack of access or lack of awareness, you are still unsure of what to do with a sudden influx of a large amount of money, you may be better off opting for the income options. In a way, the good part is a large number of insurance companies allow the nominee to make this choice while filing a claim. So it's not important that the person buying the policy has to decide at the time of purchase whether he or she wants a lump sum payout or an income payout or a mix of the two. So to that extent, the nominee can take a decision when he or she would be better aware of the financial situation that the family is in, and therefore make a more considered choice of what works for them. Is it the lump sum payout or option or the regular income payout option?
All right. I think every aspect of life insurance payout clearly explained. Thank you so much, both of you, for being on the show and helping our viewers with this today. Thank you. All right, time for a quick break. But on the Money Show, we'll be talking about investments and answering your portfolio queries. I'll be joined by Samisha from Axis Securities. We'll be doing your life financial planning. See you after this break.